Well, I hope everybody had a good weekend. I hope most of us survived the largest liquidation in history. Talk a little bit about that. But if you didn't watch my last video, again, talking about two different scenarios. Now, that's not a cop-out. That's reality. Okay? I'm not going to say, Bitcoin, you have to go and do what I say. Bitcoin doesn't, I don't tell Bitcoin what to do. Bitcoin tells me what it's doing based on my amazing indicators. I'm telling you two scenarios. One scenario is that the 4-year cycle is coming to a conclusion and we get rejection off of this 2021 trend line right here and intersecting with the highs over here from December 2024, January of 2025, and you reverse and you have a top, and this multiple point negative divergence plays out right here, right now. What would validate that? I talked about this in my last update, taking out the 50-week moving average, the green line right here. It's acted as support through the entire bull market. Here, just above it, the 50-week simple moving average. Here and here, we tagged it, we bounced off of it. Here, back at 74,000. This is what I used to call the bottom, the 50-week moving average, horizontal support, Bitcoin's average price. That's how I call the day of the bottom. Rocket science. You got to look at these levels. I'm telling you, if we take out, get a close below the 50-week moving average, and then that's followed by another close where you get an open below the 50-week and a close below the 50-week, and it will validate it like we had over here. We had a close below the 50-week. You tried to rebound back up, and it failed. You got another close below the 50-week, and then you had an open and a close below the 50-week, and it's validated that. You went back up eventually that 50-week moving average and got rejection, and the bottom fell out of Bitcoin. The 50-week moving average, Bitcoin follows the 50-week in order to determine who is in control, the bulls or the bears. I talked about this in great length and detail in my last video. If we get rejection here, you take out the 50-week, and then you get open below it and a close below it, validating it, Bitcoin is toast. That is suggesting the 4-year cycle is ending, and again, very well could be. I'm telling you, that happens, and you take out 101,000 here. This is just under 101,000 right now. You take that level out at where the 50-week moving average is right now, and it's going to validate Bitcoin's moving into a bear market. What is the bullish case? Bullish case is that either we go to the 50 and we bounce, as we've done in the past, and break this level as we bounced here and we bounced here and we bounced here, and you get rejection at it over here, that we bounce and we clear this level of resistance, this trend line right here in our 2017 trend line. That's the bullish case. That could take us, towards the 150,000 area. We had an inverse head and shoulders here that measures to 150,000, 152,000 or so. And Bitcoin goes up. I've had a longer term target of 150,000 to 175,000. I told you we could go as high as 185,000, but you got to clear the trend lines of resistance. If you can't bust them up. Guess what? You're going to bust them back down. And if you bust them back down and you take out the 50-week moving average, it's over. Simple as that. Bitcoin's not hard to understand. You clear resistance and you hold above the 50 and you clear this area, that's bullish. You get rejection at it and you take out the 50-week and you stay below the 50-week, that's bearish. It's as simple as that. It's not complicated. I'll try to be shorter with my videos in the future, but again, I'm getting so many questions. I'm trying to answer them in my videos, show you the charts. You want to see the charts. I hope you love my indicators as much as I do. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel. If you could take a moment to do that and partner with me. I don't have any sponsors. I turn those offers down. Don't want to sell you anything. Most YouTube channels make their money through sponsors. I choose not to do that. But I need to hear from you in order to make this work. You like my charts, you like my indicators, let me know that by supporting the channel today. Follow the link below to take you to a secured site and you can donate any amount you want. If you just take a moment to help out, I would really appreciate it. Watch the video all the way through. Got important things to share with you. I was not going to go this long. I was going to go shorter, but there is urgent things that I need to share with you. You want to be in the know? Watch the video all the way through. You want to be clueless? Don't watch the video all the way through. But the monthly chart, let's look at the 10-month moving average. The 10-month moving average is at 102,800. The 50-week moving average is at 101,000. So again, we're going to be watching these levels. You have key horizontal support at 98,000. Whoops, wrong one there. 98,000. Again, with the 10-month moving average, we dipped just under it, moved towards that 50-week moving average. Here, the 10-month in red. Here, just under it, hit the cloud. Here we pulled back to the 10-month and then got above the cloud. Found support at the 10-month here, just under it. Again, we could find support just under it, testing 98,000, and you could still try to go and bust up through the resistance I showed you in the weekly time frame. Move towards the Fibonacci extension levels. This is the bullish case, but you take out the 10-month moving average and you close below it, like we did back over here at the top at 69,000 in 2021. You came down, you closed below the 10-month moving average after we had peaked, and then you stayed below it. Here we tried to rally back up. Guess where we got rejection? The 10-month moving average dropped below the cloud. You dropped below the 10-month moving average. You went back up to the cloud, to the 10-month, and then you dropped below the cloud, and you got that 78% decline. So again, will turn me extremely bearish to validate a bear market is taking out the 10-month moving average, closing below it here in the monthly time frame would be extremely bearish. Taking out the 50-week moving average, closing below it, and then getting the following week an open and a close below the 50-week moving average, and validating it. It's how you're going to know if Bitcoin's moving into a bear market or not. Now, right now, the bull market is still intact. But the risk is the 4-year cycle's coming to a conclusion. A massive negative divergence here. Now, maybe it's not done. Maybe we get one more thrust higher, and that's a bullish scenario. If we can clear the resistance here, which I didn't draw that very straight. If we could bounce off of these areas, say if we go just down to that 100,000 area, I warned you back at the top in August and at the failed breakout there in October. Risk of going to 100,000 still. Oh, what did we do? And the 200 period moving average, what do? We hit the 200 period moving average. The bullish cases, we try to break this up and you get one final thrust higher and you get an extreme like you had over here. That's still very possible. You lose these levels of support I'm talking about. You get these closes below the 10-month moving average and below the 50-week moving average. Then the likelihood that the top is in and that we're terminating the bull market becomes a reality. Don't be bearish. Don't be bullish. Be objective. Look at everything objectively. Oh, you're not making a commitment. Hey, I'm telling you, if you take out these levels, I'm going to get extremely bearish. I'm, short-term bearish right now. Signals are bearish. I warned you before the sell-off was going to happen. I was getting warning signs back at the October high there on October 6th, 7th, and 8th. Told you going into the October 6th high that, again, the rally could terminate around 10.5%, as it did at the last government shutdown, and we were at risk of dropping 20%. Oh, what happened? We dropped 17%. It was Trump that tanked the markets, but it still ended up being right. Got a lot of bearish divergences, as I've said before. If we can clear resistance, maybe they're not done yet. Maybe the RSI goes to that deeper extreme. So again, we'll be watching. Had the MACD move to a new high. We still have a divergence on the histogram here. But again, I warned you, the price oscillator, momentum oscillator, all these things, they have these bearish divergences going on. If we can't clear resistance, the risk is the 4-year cycle has come to a conclusion pretty much like clockwork here in October. The bulls from the bears is the 50-week moving average, the 10-month moving average, and Bitcoin's average price. You can see right here in the daily time frame, Bitcoin's average price, this orange line right here. Again, we were going down. You got above it. You went to it. You got rejection. You pulled back to the 100-period moving average. You got above it. You went sideways. You found support at it here. You found support at it here in 2024. You found support at it at our low in 2025. This is, again, how I called the very day of the bottom, because I have good indicators and because I told you at the time, if you take out the 50-week moving average, you take out Bitcoin's average price, you take out the 10-month moving average, again, it's over. I told you we likely have a bottom. When everybody was saying, oh no, alt season's canceled, it's over, I'm going to die, I told you we had a bottom. Now we're struggling around the 100 period moving average. Again, if we drop down, Bitcoin's average price near the 50-week moving average, you take it out, Bitcoin's toast. And then you enter a new bear market. You bounce here, well, then you've got a shot at going up to the green line or towards the red line near 200,000. But you've got to be able to clear the resistance levels I've talked about. Bouncing here, clearing resistance is bullish. Breaking this level, getting rejection off of resistance and dropping below this level, well, that's bearish. Again, when we did that back over here after the 2021 peak, you tried to bounce around that area and then it failed and you ended up losing it. You went back to Bitcoin's average price, you got rejection, and we saw the 100 period end up dropping below Bitcoin's average price. And again, the bottom fell out of Bitcoin. Bitcoin dropped 78.5%. Bottoms for Bitcoin been down at the blue line here, and this low right here, this is where the bottoms historically have been for Bitcoin. So if we are going down, you're going to go down to see these lines all begin to turn down, and this is going to drop, and you're going to go down, likely see an 80 or 90% drop on Bitcoin. Now, if Bitcoin drops, if we've peaked and Bitcoin drops 80%, as the other bear markets for Bitcoin have been 80 to 90%, here it was 78, just shy of 80, you drop 80%, using a ballpark figure from 126,000, well, you're going to drop 101,000. Let me just give you the exact number, 100,800, right around 101,000. You're going to drop $100,800, and that takes you back to $25,200. That's if we've topped. You're at risk of dropping 80%. That's the minimum objective target. Bitcoin had a bear market that was 93%. 28% here, 86%, 84%. Those are the bear markets for Bitcoin. Now, I'm telling you in this video, if these levels of support are taken out, that's extremely bearish. The Moon Boys deceive the herd, and they'll ride it all the way back down. If we clear these levels, you get one final climax rally. Again, the Fibonacci extensions towards 170,000 area. I have a target of 175,000. If we can clear resistance, might be able to reach the Fibonacci extension level. Now, this red line is 2 standard deviations above Bitcoin's average price. This is where the tops have been previously. That could change. So could the 4-year cycle. The bullish case is, oh, the 4-year cycle is over now. We have institution influence now. Those are different. The bearish case is, hey, we're moving towards recession, and the 4-year cycle is still intact, which means that we either peak in October, November, or December. The tops for Bitcoin have been in either November or December. The 4-year cycle is, some of the counts, ends here in October. The tops have been marked by when the 100 period moving average gets above 2 standard deviations of Bitcoin's average price, and that has marked the day of the top within a couple of days every time. Back here in 2013, back over here in 2017, marked it within just a couple of days. Again, when you got the 100 period getting back above 2 standard deviations above Bitcoin's average price, and it's marked the top. Let me go back here to 2013 and 14. Again, notice also the bottom. The blue line has marked the bottoms, or just beyond this line right here. These 2 bottom lines mark the Bitcoin tops. And again, coming up above Bitcoin's, coming up above 2 standard deviations of Bitcoin's price, and then having the 100 get above it has marked tops. Notice here again, as I just showed you, 2017. Again, you got that 100 period getting above Bitcoin's 2 standard deviations above Bitcoin's average price. Down here, look at the bottom. The blue line, and just below it, which is, blue line is 2 standard deviations below Bitcoin's average price. And these have marked tops and bottoms over and over again. You find a bottom around Bitcoin's 2 standard deviations below Bitcoin's average price, or just below it. This is 2017, and then the market during 2018. We have the peak in 2021. Oh, what happened? The 100 period crossed above 2 standard deviations above Bitcoin's average price, and it marked a top within days. Again, look at the bottom. The blue line, 2 standard deviations below Bitcoin's average price, and this line below it here marking the bottom there in 2022. Over and over again. And this is all 4-year cycles, by the way, that I'm showing you. We come to today, and here is the 100 period moving average. We're hop, skipping, and jumping around it. Here is 2 standard deviations above Bitcoin's average price, above 200,000, just above 200,000. Just eyeballing it right around 205,000. If we can clear resistance, you got a shot at trying to move towards that area. But look how far away the 100 period is here with this rally from Bitcoin's average price, or 2 standard deviations above Bitcoin's average price. Very far away. So either you break resistance, or nowhere near a top, and you're going towards Fibonacci extension levels towards 175,000, or maybe towards beyond 205,000. This plays out again, or these are over 4-year periods of time that you've seen this happen, and we haven't seen it happen. And you got the 100 very, very far away from Bitcoin's 2 standard deviations above Bitcoin's average price. What I'm trying to tell you is either that signal is going to now fail, and the 4-year cycle is still going to hold them, and something's changing. And people talk about, well, we have institution influence now. That could be a good or bad thing. Maybe we don't see the previous kinds of crazy moves, parabolic moves on Bitcoin anymore with that influence. And remember, the percentage gains on every single Bitcoin rally are getting smaller and smaller as Bitcoin matures. They're getting smaller and smaller. The longer term return percentage wise of each bullish phase. So the question is, does the institution influence and now allow us to get up here and continue this, and maybe the 4-year cycle, people talking about the super cycle, and one billionaire talking about how don't have the 4-year cycle anymore, the 5-year cycle, and all the rest of it. Well, maybe, but you got to clear resistance. I'm just telling you, if you believe that we're going to clear resistance, you want to be watching this 200,000 area, and you also want to watch the Fibonacci extensions. If you believe that Bitcoin's done, it's toast, it's over, you want to be watching the 50-week moving average, the 10-month moving average, and Bitcoin's average price here, and you want to see us take out that 100,000 area. You want to take out horizontal support at 98,000, and if you do that, then Bitcoin is in big trouble, at risk of the bear market starting. So just wanted to show you this. The signals that have previously called the tops in all of the bull markets in the past, with the 100 period getting above 2 standard deviations above Bitcoin's average price, hasn't happened. It still could if the bulls can get us above resistance, but the risk is we drop below Bitcoin's average price. Bitcoin's average price separates the bulls from the bears. You lost it over here, you dropped below it, you back tested it, and you stayed below it, and the bottom fell out of Bitcoin. Over and over again, I can show you this. Bitcoin's average price separates the bulls from the bears. I just want to show you this. In the past, we've gotten above 2 standard deviations above Bitcoin's average price to mark the tops. We haven't done that. We hit it over here back in 2024 there. We haven't been able to reach it since. The blue line, 2 standard deviations below Bitcoin's average price, has been where we have seen bottoms develop surrounding that area. Just be aware of that. Information you're not going to get anywhere else. Live it, love it, learn it. Bitcoin is down 0.5% right now here on the Monday session. It's attempting, again, a Fibonacci retracement. The sell-off is likely not over. Again, I told you back at each of these peaks that we are likely headed to the 100,000 area, the 200 period moving average. We've reached the 200 period. I don't have it on this chart, but we've reached it. And again, we had a liquidation move, largest crypto liquidation move in history, wiping out all the leverage traders. I told you with this rally, we could end up seeing, with the government shutdown, a 10.5% rally back up. And just over that, that's exactly what happened during the last government shutdown, and then going back down and dropping 20%. Oh, gee, what's happening? Oh, we dropped 16.77% from the high to the low in 4 days. Now attempting a Fibonacci retracement. And again, let me just say this. Warned you before the sell-off. I told you we were going back to the 200 period moving average. Warned you about what could happen with the government shutdown. Oh, it was Trump's tariffs. Well, too long ago, what did I say? Overdue for Trump to rattle the markets with his tariffs. Lo and behold, here it is. But again, I had several warning signs here back at the peak. We had the topping tail on October 6th. October 7th, we had signals turning bearish. Before that sell-off ever happened, actually, right when we opened up, I started seeing the warning signals all over the place, as I've shown you. Actually, that flipped signals back to bearish with the liquidation move near the highs of the beginning of the liquidation. But we had this quick drop. You had people get wiped out. People lost millions and millions of dollars. I've read several posts on social media of people that just completely devastated. They've lost, I read one post, a guy lost $9 million, and others, people get over leveraged, and you get the market makers doing the liquidation. And what did I tell you down here? We got this bullish signal. I told you we could rally back up, counter trend, get a breakout, and go challenge the highs. We went back up. Look over here at the July peak. They liquidated the shorts. Again, they liquidated the shorts. They push it up, and then they push it back down. And I tell you, we're likely going below 107,000, down to the low 100,000. What did they do? They liquidated them. Back over here, again, the power rally. Here we go! And they liquidated them. It was a massive liquidation move. We got a bottoming tail with it. This is why they call it the Bitcoin casino. Now, again, this is why the herd and the moon boys are so oblivious to what's going on. Because, again, prices go up, prices go down. You got the market makers running around all over the place, liquidating the shorts, doing the short squeeze, and then liquidating the longs just for laughs. We've rebounded back up off of the lows here after breaking this level. And again, I'm using here Bitcoin. Different exchanges have different levels here based on the exchange. I'm using Bitcoin's price history right here, and we went down to 105,000. Okay, went down to the 105,000 area. We dropped 16.77% from the high over a 5-day period. Which again, the moon boys told us wasn't going to happen. They're wrong again. The indicator's right, and I warned you about that. I warned you we were going to go down to the 200, and I warned you we're still at risk of going to the 100,000 area, lose the 98 to 101,000 area. See in this video, then Bitcoin is in serious trouble. You bounce there, that's bullish. Then you got to be able to come back up here and clear these resistance levels. I'm telling you in this video, what has to happen for Bitcoin? If you're bullish, here's what has to happen. If you're bearish, here's what has to happen. Right now, my signals are bearish, turning off of resistance. Take out 101,000 and then 98,000, I'm going to get very bearish and tell you that, hey, we've likely entered the bear market. Bounce off this level and we clear resistance, I'm going to tell you we're likely going to 175 to 185,000, maybe as high as 205,000. If you watch the video all the way through, you'll see why. So again, keep your emotions in check. Try to remain objective. I'm telling you what has to happen for the bulls, what has to happen for the bears. Right now, signals are bearish. Now, I have no bottoming signal here. Got a couple on some other indicators. Now we've come up to the 50% retracement. Could go higher. The 61.8 Fibonacci is at 118,000. The 78.6 Fibonacci here in the golden pocket is at 121,700. These are levels you want to be watching. Also the 50% retracement. The 61.8 Fib at 118,000, often that is a level. That's the level we turned off right here. With this decline, we hit the 61.8 Fib right on the nose. And from this rally here to from June's 22nd low to this high right over here on August 14th, you hit the 61.8 Fib right on the nose. So watch the 61.8 Fib. That is at 118,000 right now, just in the low 118,000 area. Signals remain bearish, so this is a counter trend until proven otherwise. And you got people freaking out, oh, we're rallying back up. The moon boys running around that never saw, and again, these are the people that told us we had a breakout. These are the people that told us the sell-off wasn't going to happen. And now they're telling us, the people that never saw any of this coming are now telling us it's over. Absolutely incredible. What's even more incredible is that people still listen to the moon boys. They're a bunch of perma-bears that are oblivious to what's going on. They promote hoaxes like Bitcoin, strategic reserves. The government's going to go in and buy all the Bitcoin and it's just we're going to 1 million. The government never said that. The Treasury Secretary clarified that and said, hey, that's not what we've said. Yet the Moon Boys promote this hoax, and nobody ever holds them accountable. It's absolutely incredible. Plus, I digress. I'll be watching. Do I get a bottoming signal here? Do I get another topping signal, higher levels, or a larger Fibonacci retracement? Or does this thing fill at the 50% retracement? I believe this low is going to be taken out at 105,000. I told you that I thought that this low would be taken out. Warned you to up here and back over here. Again, we're still at risk of going to 100,000. Warned you also at the September high, but we ended up getting this larger rebound to have a short squeeze, only to get a rug pull for the longs. Again, I told you previously, you can go up here and liquidate the shorts here, and with this breakout, you can liquidate the shorts, and then they can come back and liquidate the longs and take out 107,000, which I talked to you about previously on several occasions. Right now, I'm still on a sell signal, at least here with this indicator. Other indicators, a couple of them are suggesting a term bottom. And again, all you got to do is look at the liquidation map. Again, there's the August peak over here, the September high. We came back down. We tested this 107,000. I told you there was folks that were going to need to be liquidated there, but we came back up and we liquidated the shorts, the bears, again pushing up through the September high here, and then coming back up and then getting a failed false breakout above the August peak, and you had liquidated some other folks up here. This was over a 3-month period, and then we came down and we liquidated the folks at 108,000. You liquidated the folks, again, these traders that were heavily leveraged, getting wiped out. Billions of dollars lost individually and billions collectively. That's what they do. The market makers go up and liquidate the shorts, and then they go back and liquidate the longs. It's a game. They liquidated a bunch of folks at the 108, 107,000 area on into this area right here. Okay, we're rebounding back above that right now, but if they go back and take that out, again, there's more down here in the high 90 area. Again, this is that 98,000 area. You got it at 96, 97, 98,000. I'm telling you, you take out that low. You take out 98,000 horizontal support, you take out 101,000, which is the 50-week moving average, and you start closing below these levels, Bitcoin's in serious trouble. You bounce here, you can try to bottom out, but I still think we're headed closer towards the 100,000 area and towards testing 98,000. So again, just be aware that we're likely to see more games with the market makers. Remain bearish here, signals remain bearish. Again, I gave you a warning sign back at the top. I had several warning signs. With the liquidation move, there's no bottoming signal here. We're rebounding back up towards the 50% retracement right now. We can go all the way up into the golden pocket and still have the signal be bearish. So again, even if we rally up 118,000, 120,000 area, the signals are still going to be bearish on many indicators. But I warned you before the sell-off, I was getting these warning signs that major resistance, the signals were still bullish at the time, but I was warning you, they were saying that a sell-off was going to happen. I warned you we could still go down to the 200 period moving average in the 100,000 area. I was mocked and laughed at, being so stupid as to possibly think that, but yet the indicators were correct yet again. I warned you I had topping signals as we came up to just under this trend line. I told you we still might try to form a divergence with it before going down and testing these lows down here. I had several signals triggered up there, and I told you that may just be it. We didn't quite reach that trend line. If you exclude the shadow over here, we did. There on the daily chart. Now we had this tiny little divergence. That's giving us this bounce right here that we're getting right now. We've come back up to the 200. The 50 is dropping. It's still above the 200 period moving average, but they're crisscrossing back and forth as we have a potential triple top pattern here that could still take us lower. This pattern actually measures down to the low 90,000 area. If you do that, then you're at risk of the bull market ending. If you can find support around the 98,000 to the 100,000 area there, 50-week moving average at the 101,000 area, you can try to bottom out and try to go bust above this level. There is no larger divergence that's developed yet. We're still in the negative region here in the 4-hour time frame. Again, the divergences have marked the tops and have marked the bottoms. And I've talked about every single one of these divergences. These divergences helped me call the July peak, the August peak. We slammed into the major resistance in the weekly time frame, which we formed these divergences, and we did it again here just under that trend line. Told you about the bullish divergence here going into the September high, the negative divergence in September. We got the higher low there. Talked about this divergence. Eventually that gave us a breakout. You went up, liquidated the shorts, and now you liquidated the longs. It's as simple as that. I'd be watching for a larger divergence to develop here, multiple point divergence or larger simple divergence before we get any kind of meaningful bottom or potential bottom. And as I've said, we're getting a bounce. I think you're going to go back and take out the low at 105,000. Said back up at the top, I think you're going to the 200. Well, we've hit the 200 period in the daily time frame, but I told you I still think we're going to that 100,000 area. If we repeat what we did back with the last government shutdown, that takes us down to the 100,000 area. I talked about this in past videos in great length and detail. Moon Boys told us this wasn't going to happen, and had a breakout, and again, they were duped again, and they duped the herd into believing their nonsense. The indicators right yet again, the Moon Boys wrong yet again. We are at risk of forming a Wyckoff distribution schematic pattern number 1. And again, we're following it fairly closely, not perfectly, but fairly close, which is a triple top type of a pattern here. And third peak comes here up above the first high, above the second high, and then it fails. That's what we've done. We come above the first high over here, come above the second high for 2 previous highs, and it's now failed. So you got the possibility of a Wyckoff distribution scenario here going on from the July high. No warning at the top. We had one. It went away. No warning here at the bottom right here. The signals usually do a pretty good job right now. So again, the risk is that we come down to this line right here near the 100,000 area. Again, testing the 98,000 area. Back below the purple line, not good. If the orange line crosses it, you're going to get a bigger sell-off. We're going back and forth, and that's representing the sideways move here. But we're rallying back up towards the purple line. If we can go higher, you can hit the orange line and maybe a higher Fibonacci retracement. But again, no bottoming signal here as of yet. I got one here, had a topping signal, but it went away at the top just like the other indicator. Had a bottoming signal here. So again, short-term bottom signals are still bearish. And again, I gave you all these warning signs back at the top before this big sell-off ever happened. Had the warning sign here. Again, bars are red after that warning sign. Warned in July, warned in August, warned in October. Called the bottom, called the top back in January. If I zoom out, you can see that here. Again, gave you these warning signs. I had a bunch of them back up at the top. Here again, October 7th, we had the warning sign. And again, it played out. Signals reverted back to bearish after those warning signs. And I warned you we'd be going to the 200 period. Oh, what happened? Went into the 200 period. Could reach Bitcoin's average price down here near the 101,000 area. And also that's where the 50-week moving average is. The moving average at 102,000. To video all the way through, and you'll see all of those. No bottoming signal here at this time. We got the bottoming signal over here. These tops and bottoms have marked the turns spot on. Now with Sunday's bar, I did get a bottoming signal here. Again, signals are still red. You could rally all the way up to the golden pocket, the Fibonacci retracements, and still have signals bearish. Did an outstanding job again of marking the top, marking the bottom here. These other turns, absolutely incredible. We'll mark the bottom over here, mark the top over here, and some of these other turning points. A couple of signals that are saying, hey, we're getting a bounce. Other signals still on a sell signal. And here, again, another warning sign. I gave you all these warning signs back up at the top, and it eventually flipped the bars to red. Went back and tested the 200. We're just above the 78.6 Fibonacci. And again, you could go deeper into testing that level or hitting it. It's at 103,000, 104,000 or so, rounding up. Again, testing 98,240. Still reach that 100,000 area. Find a higher low. That would be the bullish case. taking out 98,000, using the 50-week moving average, Bitcoin's average price, and the 10-month moving average, and staying below those levels, that would be extremely bearish. Again, I think we have a counter-trend rally. I don't think the bottom is in yet. So I get clear evidence of that. I don't have that at this time. I remain short-term bearish, but again, a bounce as expected after dropping nearly 17%. We'll probably take out the 200 period moving average like we did back over here that created a bottom when I called the very day of the bottom back over here on April 7th.